I'll start with a legal disclaimer, and then Akash will put the legal disclaimer up in the chat box as well. We are not, like Manhattan Street Capital, we're not valuation professionals. We are not broker-dealers. We're not underwriters. We're not securities attorneys. We're not investment advisors. So we don't do any of the things that those professionals do. And you should check with professionals on anything that I say. My intention here is to be as pragmatic and helpful to you guys in assessing the merits of Reg D and how to market it and how to sell it, and to do so legitimately. That's the intention of this webinar. But again, if in doubt, check. If there's any question, check. And I'm not going to be telling you what your valuation should be anyway, but bear in mind those disclaimers. So I'll get started now. My name is Rod Turner. I'm the CEO and founder of Manhattan Street Capital. I launched the company 9.5 years ago because of Reg A plus. Frankly, I think it's a very good rule system, and I think it has a great broad set of uses for capital raising purposes. And as an outgrowth of that, we got into Reg D offerings and Reg S, Reg S being international style offerings. It's otherwise somewhat similar to a Reg D offering. And this webinar, as you know, is all about Reg D and how to combine Reg D synergistically with Reg A plus offerings. So we'll get into those topics. Akash is here with me. He's a key member of our team at Manhattan Street Capital. Thank you, Akash, for getting all of the blog together, the webinar logistics together, and the email invitations and so forth. Thank you, as usual, for that and for your help now. My background is that I started my career as an apprentice, and then I became a professional electrical engineer on a nuclear power station in England. Then I moved into computers in the UK, in marketing computers in order to progress my career more rapidly. And then I moved to the US for California for better weather and more for better business opportunity as well. And then as a result of that, I moved over here, got myself situated with my my temporary visa and my green card and so forth. And I got into high-tech startup companies during the PC industry's growth phase, early growth phase. So I have, prior to this company, Manhattan Street Capital, I've played a key role in building 6 successful high-tech startup companies to liquid outcomes. Of those, 2 were IPOs to the NASDAQ. The first one was a company called Ashton Tate. We made a product called DBase. And I was there during the DBase 2 and DBase 3 and 3 Plus era. I was the 12th employee there, built the sales and marketing organization and the international organization at Ashton Tate, and was there for the IPO. And then I moved on to the other more well-known company that I helped to build is Symantec, the company that brought Norton Antivirus to market. My team built the Norton Antivirus and launched it in 1990, 1991. 91 is when we launched it. We built it to be one of the leading, if not for a while, it was the leading antivirus, at least in the US. And I ran the largest acquisitions that Symantec implemented. I made those mergers succeed. And I've done venture capital in the past. We have a small venture capital fund here that is also coordinated by me, run by me. And Manhattan Street Capital, I launched this company I launched the company, we went live in May of 2015, about 6 weeks before Reg A Plus went effective. We were the first focused Reg A Plus funding platform and advisory service. There were other companies that were already doing Reg D offerings that added in Reg A Plus. We were the first to focus on Reg A Plus, and we were very early in that game, 2015. We are a boutique company. We don't try to do hundreds of offerings. We do a handful of offerings. We add a lot of value to those companies' offerings and advisory services, as well as our back-end investing platform, which we continuously improve, which makes it easy for the investors to invest, and it makes it easy for the marketing integration to tracking of all activities in the back end in order to better optimize advertising outreach. I recommend you use the speaker view settings. Click on the view button and use the speaker view setting during this session. Feel free to put questions in the chat box at any time, starting now, whenever you see fit. After the prepared remarks, I will address as many questions as I can at that point. It'll be an open Q&A essentially. We will be recording this webinar. I request that you do not record the webinar yourself. We'll be recording it and we'll edit it. If there are any mistakes that we identify, we'll remove those mistakes. We'll send out a recording to you. Everyone who attends and everyone who booked to attend this session will receive a link with an index, with a clickable index that shows you the webinar recording, so you can just go to the parts that you want to see without having to watch the whole thing, because this is going to go probably an hour and 15 or an hour and 20 minutes is my expectation. Our focus today is raising capital online via Reg D, and in particular, in addition, how to combine Reg D with a Reg A Plus offering and make that synergy, make that work more effectively than just a Reg D or just a Reg A Plus alone. We'll touch on the advantages. I'll describe what Reg D is. I'll explain its advantages and disadvantages. I'll describe what companies are better, more likely to have success with a Reg D offering. I'll explain the benefits of combining Reg D and Reg A Plus and how to do so in broad strokes terms. I'll review the primary regulatory compliance issues that the SEC requires in a Reg D offering. I'll cover the schedule as well as costs and marketing methodology. I'll discuss payment processing and the nature and behavior of investors in a Reg D offering online. And we are focusing online, as I mentioned earlier. And I'll talk about the logistics of combining a Reg A Plus with a Reg D offering. Minimum and maximum amounts to raise or that you can raise. And I'll talk a little bit about liquidity, and then we'll get into a Q&A session. And when I get to the Q&A session, I'll prioritize those that are posted first, as well as those that I can add the most value to. If it's a question that I really can't add value to, then I'm probably not going to prioritize answering it. So what is Reg D? Reg D is, one way or the other, it's been around for a long time. The SEC amended Reg D in 2012, September of 2012, to enable companies to market themselves and their offerings online for a Reg D raise. So Reg D is, there are two forms of it that matter, 506B and 506C. Many people who have only done raises offline habitually use 506B, which when you know the people that you are emailing and making phone calls to are accredited, then you're allowed to raise money by a 506B, and they're able to self-validate. They're able to state that they are accredited, what their income is, what their net worth is, which is a blessing. The disadvantage of 506B is that you are not allowed to market that offering online to anybody. You can only promote it to people that you already know are accredited. Not that somebody else knows are accredited, but that you already know are accredited. So that is a significant restriction, which is why most people use 506C when they're raising money online via Reg D. 506C allows general marketing, PR, advertising, social media advertising, where people who are attracted may be accredited or not, but you are only allowed to accept investments from those who are accredited. And this is the negative that goes with that. They are required to validate that they are accredited with a third-party service that is run by an attorney. So we have such a service that we work with. But it is a bit of a pain. Somebody who is very wealthy has to prove that they're wealthy, and they have to take some steps, upload a couple of documents. It's a bit of a pain to do that, but that is the price of entry in order to be able to advertise and promote your offering to the masses, essentially. I'll be getting into more of these things later. Online solicitation is okay, I said that. There is no maximum amount of money you can raise in a Reg D in any period of time. Logistically, you are limited by the number of investors that you can bring in. If you exceed 2,000 accredited investors, there's a thing called Section 12G, which can, in some cases, depending on the size of your business, when the business is big enough, it can require you to do expensive audits every quarter, as if you were publicly traded on the NASDAQ already. So that is a restriction that matters. There are legitimate ways to solve that problem. Typical investment amount in a Reg D offering online will be 15 to 50K, obviously depending on the nature of the offering. Disadvantages of Reg D, I've touched on a couple. Investors tend to be skeptical. Most Reg D investors, that by definition, they're already millionaires. Many of them have burned their fingers, as I have. So they're more savvy. They're more difficult to reach because they have a bazillion options. So many companies are raising money and providing them accredited investors opportunities to invest that it's harder to get their attention. For the issuer company, you guys are probably, most all of you are probably issuers, you will get a lower valuation raising money in a Reg D from accredited investors typically than you would via a Reg A+. The Reg A+ is a public offering with restrictions that go along with that, but you can generally get a higher valuation in that offering. And the accreditation verification step that I already mentioned, that's something which will irritate some people or put them off online investing. Advantages of Reg D, you're allowed to make projections. Unlike in a Reg A+ or an S1 IPO, where we have to protect the investors from naive or greedy founders. I'm going to close the door for a minute because my dog is barking. So unlike in a Reg A+, where we have to provide a great deal more protection, in a Reg D offering, you're allowed to make a projected internal rate of return statement. You're allowed to project how many buildings you intend to buy or how many acquisitions you might accomplish, you intend to accomplish over a period of time, depending what it is that your business plan is. Those types of projections are a luxury that you get because the SEC says, they don't say this to me, the SEC's behavior indicates that they consider accredited investors to be sophisticated enough that they don't need to be so protected. They can interpret with the right degree of skepticism the statements and claims that you are making in your Reg D offering. Another advantage is you don't need audited financials in a Reg D. The process of filing with the SEC is very simple. You don't file and ask for feedback. You don't expect any response from the SEC. You're supposed to file a Form D offering within 30 days of accepting your first investment. So it's very, very relaxed. That's not a remarkably demanding thing. But the SEC then obviously reserves the right to audit, that is to say, to check your filing at any time in the future and compare it to what you're doing and make sure that what you're doing is legitimate. But it's a heck of a lot simpler than an S1 IPO or a Reg A+ filing, for example. I would say the marketing restrictions in Reg D offerings 506C are very straightforward. You're not allowed to make hyperbolic kind of statements. You can't say we are revolutionizing the entire AI chip business. You can't make grandiose claims like that. What you say has to be based on fact and be reasonable, but you are allowed to do broad-based marketing via advertising vehicles online, and I think it's pretty straightforward. Frankly, I don't think the SEC's restrictions are unreasonable. The legal filing documents are a lot less expensive than an S1 IPO or a Reg A+. A PPM is required, private placement memorandum. It has other, people call it other things, but this is a document that provides extensive risk factors in it to warn the investor and to reduce the risk of future lawsuits. It also describes the terms of the offering, and it's essentially a statement of credibility for the company. It states what the business is, it states who the principals are, what the terms of the offering are, etc., etc. And that's less expensive by far than some of the other capital raising methods. Reg D, excuse me, is widely known and accepted. The last time I checked, there was something like $6 billion a year being raised by Reg D, and that probably severely understates how much money is raised. You are allowed to provide investor optionality. For example, you're doing a real estate project, and you will offer the option at the 3 and 5 year points for investors to redeem their investment with whatever gains that they have accumulated, or to stay on board and reinvest. That optionality is a very powerful thing which you have in Reg D that you don't have in a Reg A plus or an S1, for example. And you can use more sophisticated instruments in a Reg D, which you could probably use in other methods, but they don't work so well. So because the investors in a Reg D offering are accredited, more sophisticated, you can offer things like warrants that might confuse investors in a public offering, in a Reg D offering, sorry, or in a Reg A plus offering. Suitable companies. You've got to look at this from the investor mindset, right? So accredited investors in a Reg D offering are a skeptical bunch. They're going to do due diligence, they're going to check with their buddies, they're going to look at the investment, the competitive landscape. They'll spend time and effort checking into your company and your offering. Fair enough. But with that understanding, then that gives us a better handle on how we should market to them. Demonstrate the credibility of the company, the credibility of the team. Make sure that the offering documents are professional and comprehensive and well written. But also the terms have to be attractive. The valuation you're normally going to get in a Reg D offering will be substantially lower than in a Reg A plus, for example, because we're dealing with accredited, sophisticated investors who really demand that. One of the things that I like to use as a test in considering the viability of a Reg D offering is it should be so attractive that when an investor who recognizes and understands the business is evaluating it, they like it so much they don't want to tell their friends, because they're worried that if they do, their friends might take the capacity, thereby displacing them from getting in. They have to think of it as a hot opportunity. It needs to be easy to explain. We're doing online advertising, right? We're doing social media advertising on Facebook and Instagram, and if we can get into it, TikTok, because it's so much more cost effective than Facebook and Instagram are. But we're talking about somebody's doing something else in their social media stream, and we're intervening with an advertisement that has to be compelling and attractive and easy to understand. And if they click on it and come to the offering page has to be so compelling that they stick around, that they spend 10 seconds so that we can get them to spend 30 seconds, so we can get them to spend 2 minutes and potentially engage, give us their email, start an investment even. In these online offerings, you would be surprised, if you haven't done them before, you would be surprised how often people will advise themselves and will start an investment or even complete an investment on their mobile phone in these online offerings. Obviously more so in more retail oriented raises like Reg A plus, but we see that in Reg D 506C offerings also. Must be easy to explain. The trends in the business must be favorable. These are just obvious things. If you're in a business where the market's declining in size, it's going to be hard to convince people to invest. Very obvious. Has to have a credible team. The kinds of businesses, pre-IPO companies that have the potential by the nature of what they're doing and the stated intention to go and list when the circumstances suit, is going to be a more attractive kind of company in a Reg D offering. Biotech companies can be very strong. AI companies are topically, very current. Green tech companies, since the passing of the IRA Act, which puts a lot of money in play for companies that do good things in the green tech space, there's a lot more there's a lot more engagement from accredited investors in Reg D offerings that are green tech from that, as a result of that. Touching on the benefits of combining Reg A Plus and Reg D together. So one of the key factors in promoting a Reg D offering is that the principal advertising instruments, I already said Facebook and Instagram and maybe TikTok, they are never very good. They're never good enough at only bringing in accredited investors. You might get 8 unaccredited investors for every 1 accredited investor you get. I mean, I have a lot of experience of this, right? So by definition, it's wasteful. You want to be able to narrow in the advertising to only bring in accredited investors because they're the only people you can accept. And every dollar you spent bringing in unintentionally unaccredited investors is very wasteful. Adding in a Reg A Plus in partnership with the Reg D allows you to harvest a sizable portion of those unaccredited investors who like what your business does. So that's one very clear marketing advantage. There's 2 broad strokes, 2 ways to combine a Reg D with a Reg A Plus. Because the Reg A Plus has an SEC filing journey requiring audited financials, typically 2 months or so to prepare and 2 months to get through the SEC, you've got 4 months there where you aren't doing anything yet. You can do a Reg D offering much faster, go live with it more quickly and raise money prior to the Reg A Plus going live. So that's an advantage from a timing standpoint. But there are 2 broad strokes ways in which to use Reg D. One is as a straightforward investment vehicle to raise money from investors where they get stock in your company, and you would be offering them somewhat more advantageous terms prior to the Reg D, as you would expect. And you can continue that Reg D in parallel with the Reg A Plus once the Reg A Plus goes live. Another way to use Reg D is as a convertible note instrument where investors, when the Reg A Plus is qualified, their investment converts into an investment in the Reg A Plus. So they gain faster liquidity that way, and you are allowed to give them a discount on the valuation of the shares in the Reg A Plus. So you can sell shares at a discount via the convertible note to the Reg D accredited investors. So the Reg A Plus, the existence of the plan, the intention to conduct a Reg A Plus, the fact that you are doing the work and filing it with the SEC gives you credibility to the friends of the company, potentially existing investors and other accredited investors that you can draw in. Of course, you cannot promise ahead of time that the company will ever be qualified by the SEC because the SEC reserves the right to qualify or not. But you can state your plan and the intended share price of that planned offering and so forth and so on. But potentially the more interesting twist here, though, is that once you are live with the Reg A Plus, you can continue a Reg D offering in parallel, which would not be a convertible note then. It would be a share offering in parallel with the Reg A Plus. And you are allowed to offer preferential terms to the accredited investors because they are accredited and because they are more illiquid. Somebody investing, let's say we've been live for 2 months in a Reg A Plus, and a Reg D investor is considering investing through the Reg D. They're allowed to invest in a Reg A Plus, of course, but it may be attractive to them to invest in a parallel Reg D where they have less liquidity, delayed liquidity, but that they're getting warrants or a lower share price in their investment because of the limited liquidity and because of their accredited status. So that's interesting from a selling and marketing standpoint because we can turn on a feature in our investment software, in our back-end payment system, where somebody is investing in a Reg A Plus. And once we identify that they are accredited, then they can be invited to invest in a Reg D offering by your employees. You have somebody, maybe one person working half-time or more than that, depending on the size of the capital raise. But those people are allowed then to email that person and say, hey, you're accredited if you'd like. You might want to look at our Reg D offering. Here are the details. Click on the link to look at the offering page for it and let us know, or just go ahead and invest. So pairing the two together, it gives the opportunity for a sales interaction with the investor, and any legitimate reason for that can be valuable. And it gives the accredited investors benefit of potentially better terms, where you're rewarding them for putting in larger sums of money in a less liquid instrument. And we've seen that work very well for some of our clients. So let me see, selling opportunity, more efficient advertising, I mentioned that. And Reg D will sometimes bring more institutional interest because some institutions are still not aware of Reg A+, whereas they are aware of Reg D. They do Reg D off investments all day long. So moving on, we've already touched a little on the regulatory side, but I'll now give a bit more emphasis to the regulatory side here in a Reg D offering. Every investor must have a know your customer step done, which we do on our investing back end. There has to be an anti-money laundering check to make sure that each investor is not on the federal bad actor list in any way, shape or form. And in a 506c, which is really the only viable way to advertise broadly a Reg D offering, in a 506c, they must verify their accredited status. So we integrate that into our back-end payment processing system, and they have to complete that step. So those things must be done in an online Reg D offering. The private placement memorandum is a requirement. The SEC requires professional disclosures, and you, as a leader of your company, want professional disclosures because you want to minimize the risk of future litigation. You want to disclose everything that matters so the investors are well informed. Let me see if that's urgent. No, it isn't. Okay. Risk factors, I mentioned, got to be comprehensive because we live in a litigious society, and we want to thoroughly inform investors so they know what they're getting into. There should be no secrets. Having a transfer agent is not a requirement, but it's a heck of a lot easier when you do use a transfer agent. And believe you me, they do a lot of work. They earn their keep. They don't charge much money for their services. They provide legitimacy to the offering. They provide an online account access for your investors to check in and see the state of play. And if you've raised the share price, the security price since they invested, that will be reflected. The current raised price will be reflected as the value of their security in their transfer agent account. That's great stuff. But most importantly, for many companies who have only raised money through Reg D in the past from angels or other wealthy investors like VCs, they may have had 4, 6, 8, 15 investors. The idea of dealing with hundreds of investors is pretty intimidating. And the transfer agent does the logistics of that stuff. Somebody's transferring their investment from their personal name into their family trust. They deal with the transfer agent to do that. You're paying dividends. You can have the transfer agent distribute those dividends in a cost-effective manner. They take a lot of the work off your plate. Regulatory-wise, I mentioned, if you exceed 2,000 accredited investors in your Reg D, then in your company through offering money through Reg D, then when you reach certain size levels, I think 75 million in revenues, 50 million in float, I think is the right number. Double check on that. We have that listed on our website in a FAQ. Then if you were to exceed those numbers, then you need to produce expensive audits every quarter going forward. So you want to avoid that in any reasonable way. But of course, 2,000 accredited investors is a hell of a lot of investors when they're putting in sizable amounts of money each. And, liquidity for these accredited investors is limited. Theoretically, an accredited investor is allowed to immediately sell their stock in your company to another accredited investor day one, but only with a cooperative securities attorney letter telling them that that's the state, validating that. It's more normal to do accredited to accredited investors at the 6-month point, And technically, an accredited investor can sell to any investor at the 12-month point after making their investment, unless you put a lockup on them. So those are the principal regulatory issues around Reg D offerings, along with a couple other minor ones or other ones that I mentioned already. How are we doing on time? No, we're doing pretty well. Okay, so from a scheduling standpoint, it's, as is often the case in life, theoretically, you could put together a wonderful offering page in 2 weeks, especially with the advent of ChatGPT and so forth. But life intervenes, complexities are there. It's normally going to take you 4 to 6 weeks to have the marketing agency, which we bring in typically. You're certainly welcome to use your own marketing agency, but we have qualified marketing agencies that we know and trust that know their stuff. Point being, to create the content and have it beautiful, have it effective, have the right messaging, and have it ready to go live is normally going to take 6 weeks. It can be done faster. So the filing, the creation of the private placement memorandum can be done in 2 or 3 or 4 weeks, assuming that you are ready and able to answer the questions on the key aspects of the offering for the securities attorney, and that we have a good securities attorney on board, which of course we will bring to the table if you don't already have one. So I would say going live at 6 weeks is realistic, as long as proper attention is being paid by you and your team. The offering page content is critically important because not only does the advertising outreach and the email outreach have to be really strong, when we bring these potential investors to the offering page, it has to be clear cut, it has to be attractive, it has to be visually pleasing, it has to be complete enough that the thorough investor can find out everything they need to find within reason. It has to be well done. You need an offering video. The offering video needs to be short enough that people will actually watch it to the end. And it needs to be clear cut. It has to, the style of delivery has to be right on. It can't be too salesy. It needs to be more of an honest and open kimono style. And I guess the most important thing to know in going live, I'll get into the marketing in a moment. I'm on schedule here, so let's stick with that. 6 weeks to go live is a realistic goal. That's the key item. Thereafter, we build a marketing funnel, we build a prospect investor funnel, and I'll talk about that now. Marketing, okay, Reg D marketing, online general solicitation. We have an investor member base of accredited investors that you're welcome to email to. We'll encourage and facilitate that with the marketing agency involved. You aren't going to raise all your money there because our investor list is too small. We don't abuse them. We respect them. They don't get inundated with emails. But each offering is so different than the other. I think that the only way we'll raise money easily from our investor base is when we have more than 1 million investors that are not abused. And that these days there are big platforms like Start Engine with giant investor lists, but they abuse the privilege. So there's all sorts of restrictions there in terms of the effectiveness of being able to access those people. Okay, but advertising is the real issue here is that advertising outreach is the most effective vehicle, and there are some exceptions with email. We're working exclusively with a startup email company that has rebuilt the email system. They vertically integrated and use AI in judicious, careful ways, but also do very intelligent things with getting email delivered to recipients in an effective way for a 506c offering. So this is a rare exception to where what I've seen in the main with email with bought and rented lists of supposedly or actually accredited investors. Generally, those email outreach programs are very ineffective. I've seen that chapter and verse. Advertising outreach through social media is the best way. Google isn't very good. LinkedIn isn't very good. Twitter/X isn't very good, although that might change because that's a moving target. But advertising is the outreach vehicle that does work. Targeting, using the right right investor targeting methods, which is a state-of-the-art thing that is constantly evolving. So if we're working together, I'll be advising you and the advertising agency in order to make sure that they're doing the right work to target the right people and bring them in cost effectively. One of the nice things about this method is that it's easy to see quickly how cost effective it is, how much resonance we're getting from the advertising and from the offering page. It doesn't take months and months or even weeks and weeks to tell whether we have successful engagement or not. Not to say that everyone's going to rush in and invest on day one. With accredited investors, they will take their time and consider what they're doing, but they will be investing over time. But the point here is that we can easily track the cost of acquisition of each lead, and that tells us an abundance of things, right? And then, of course, the conversion rate of those leads into investors is also easy, although not instant, to figure out. So my point here is that you don't spend a lot of money up front in advertising. Typically, a $10,000 of ad spend per month is enough first month to ascertain which ads are working best, which messaging is working best. You're obviously not going to raise much money on a 10K ad spend, but getting that efficiency of conversion into prospects, and then optimizing the conversion of those prospects into actual investors is key, and we build that efficiency over time. We are not a marketing agency. We're involved in too many things to be allowed to be a marketing agency, but we advise you and we advise the marketing agency to maximize their efficiency and your efficiency of the outreach. Okay. You don't need a broker-dealer. You're allowed to have a broker-dealer on a Reg D. Generally, it isn't going to help much because, excuse me, in these online raises, broker-dealer, even if they intend to raise money from the get-go, when it's a blank slate, they're not going to do anything. They're not going to put their client relationships at risk for an unproven offering. Once we've done the heavy lifting together to bring in prospects and get them to invest and have a good result from that, it's going to take a little while to do that. Once we have that success, if we think it's less expensive to bring in investors through a broker-dealer, then adding one would make sense. Very rarely the case in a Reg D that would add value. A big part of there was a question in the preamble for the folks who were here before we got started about how to find accredited investors. The problem isn't so much finding them, it's getting their attention, in my view, because they have so many and such an abundance of places to put their money. That's one thing, is being exciting enough for them to care. Another one is that I'd have to say, probably intentionally, if you go for the most wealthy segment of investors on Instagram and on Facebook, they still deliver an abundance of people that aren't accredited. Probably they're doing that for their selfish reasons, to bring in more money to their coffers, but it isn't helpful to us, right? So it is difficult. Some of you guys are familiar probably with the way online advertising works in today's market, in today's world. There's a lot you can do with targeting of advertising to fine-tune it, and these platforms, these social media platforms, they have AI software that is tracking. It's up to us to make sure we get early effectiveness, and that from that effectiveness, then their AI will track, oh, we got another one of those people that like this company enough to invest. Let's get more of those. They continually adjust through their AI to find the right people, and it's up to us to nudge it and adjust it and tweak it enough to make that work quickly, to get the efficiency of outreach as high as humanly possible. Okay, all right. Again, if you want to ask questions, you're welcome to put them in the chat box. Let me just change the setting here. Yeah, good. Payment processing, a couple of important points. Most investments are completed on mobile phones these days, more than half, even in a Reg D offering. Credit card, debit card, ACH payments, wire transfer and checks are the payment methods of choice. Obviously, with large sums, it's going to be a wire transfer usually. ACH is the least expensive method, but making it convenient to invest via debit credit card satisfies a lot of people. And again, on a smartphone, amazingly, it used to be 9.5 years ago, when I launched Manhattan Street Capital, we would rarely see investments via smartphone. We would see people finding an offering and inquiring, checking into it on their smartphone, and then coming back on their computer or possibly their tablet. But these days we see a lot of investment activity on the smartphone. Very impressive change in dynamics. Keeping the costs low is important. These days, unlike in the beginning, we have a lot of companies that we're competing with that aren't like us in that they don't offer the same degree of services that we do. But I could consider them displacement competitors, where companies will go to them because they find them, they come across them, and without looking at us, so they go to those other companies. But they're often charging very rich payment processing fees, 4% on a check deposit or a wire deposit, ridiculously rich fees, adding to the already significant fees for debit credit card payments, making it way too expensive. We do not make any of those charges. We do not mark up any of the payment processing. We don't mark up payment processing. Our back-end system is the most cost-effective you can find, I think. I think one thing to explain to you guys, obviously there's a mix in the audience. I don't know exactly what your experience level is, but for those of us who've only raised money in person or via email and phone meetings and discussions at length, the fact that people will invest in accredited investors will invest online without having a meeting, without having a discussion, is really intriguing and impressive to me, and probably should be impressive to you, because it's very different than one might expect. By definition, anyone who is open to investing in an online offering and actually has to be an optimist. People who are not optimistic won't even contemplate it, right? The likelihood that somebody's going to fly across the country to check out your business and have meetings with you in person is slim. So it's up to us to do the maximum job possible via the offering and by email updates and by videos and webinars to convey the credibility of the company. But it's still a leap of faith and only an optimist would take. But they do take it. So it's commonplace to see people investing $15,000, $20,000, $25,000 in a Reg D offering without having had a phone call, without having had a meeting. Of course, the efficiency of conversion goes up when you have somebody working for you that maybe we introduced, but that is working in your employ as a contractor or as an employee. That is following up via email to inquire why that person started their 50K investment but didn't finish it, and helping them, nudge them across the line in legitimate ways. And then in that case, of course, we're training those people so they know what they can and cannot say and do, and how they can be paid and so forth. But my point is that obviously when there's a proper, appropriate sales effort going on, then that will increase the number of investments that come in. But you would be surprised how many people will invest unhelped with the content being provided to them and the follow-up emails that build credibility. The logistics of combining a Reg A Plus and a Reg D, one of the features we've added into our investment flow as an option for clients that do combine both. We used to have it be that when somebody's in the investment flow, anyone can invest up to, without being an accredited investor, anyone in a Reg A Plus offering is allowed to invest up to 10% of their income or their net worth, whichever is the higher number, in any individual Reg A Plus, which is a pretty generous maximum amount. If they want to invest more than 10%, and they self-state, they don't have to prove, we don't have to check, and they don't have to prove their net worth or their income. If they are accredited, they can state that, and they can self-state their income and their accredited status in a Reg A Plus, which is advantageous. But we don't make that intrusive because most people don't need to be accredited to invest as much as they want to invest. When we're pairing a Reg A Plus with a Reg D, then we have a switch we set, which requires people to state, are they accredited or not? And if they're accredited, then they become a prospect for the internal salesperson on your team to approach them and offer them the opportunity to invest in the Reg D and get advantageous terms. So that's a little change that we make. The other obvious things are, if somebody starts off in your Reg A plus and then decides they want to invest in your Reg D, we intelligently fill in their data in the Reg D so they don't have to type it all over again, which is an obvious thing to do. And there are similar things, other similar things that we do. Probably the most important thing of all here is that the back-end investment process integrates into the customer relationship management software that you are using, and tightly so that the person or people in your team and the advertising agency can see what's going on in infinite detail, in great detail as to what the state of play is, who's reached what level in the investment process, which person from which ad on what day with which target audience metrics is the reason, what was the ad that caused this person to make this advantageous investment. All of that integration, but most of all, the most convenient access to the internal salespeople so they can efficiently sell, whether it's the Reg D or the Reg A plus. The integration of all that data, doing that very smoothly, is hugely important, and of course we facilitate that. Okay, moving on to costs. Assuming competent service providers, which is one of the reasons we're here, if you were working with us, to get a PPM done is going to be $20,000 to $30,000. Of course, you can spend a lot more, and sometimes there are good reasons to spend a lot more, but you can get a very good PPM done for $20,000 to $30,000. Marketing setup is typically going to be $25,000 to $35,000, including all the moving parts. And again, of course, there are exceptions. If you insisted on having 15 offering videos on your landing page, I would recommend against that. But if you did, that would cost too much, and that would jack up the price a long way. So the front-loaded expenses, assuming that you are not unnecessarily delaying the whole process, of around $50,000, $75,000, $80,000 front-loaded expenses to get your Reg A plus live. Of course, if you already have one and you already have a PPM that you are not offering online and you want to convert it to be online, then it saves a lot of money and time. That goes without saying. Once we're live, it's all about that marketing outreach and getting the efficiency higher and higher and raising the spend on advertising according to the outreach being higher and higher so that we can raise lots of money cost effectively. And this is where it comes down to how appealing is the company, how attractive is it, how well suited, how good are the industry trends, how good is the advertising, how much attention is being paid to adjusting everything to optimize it in order to bring the cost of raising capital down. The least expensive that I've seen in a Reg D is to spend $5 to raise 100. That's the least expensive I've seen. You're more likely to see a $10 per $100 raise ad spend, but it doesn't happen instantly overnight. That is a building process where we're building a prospect funnel. We're sending regular emails to those folks with updates, with short videos explaining about the company in an open kimono style. And those emails become more and more valuable because they cause people to convert from prospect to investor, or to adding to their investment, or to coming back with their IRA, the managed IRA, and investing a larger sum through it. Minimum, maximum numbers, excuse me while I refresh. We're doing okay on time. There is no depending on the nature of your offering, there's no minimum, but if you are, let's say you're raising money to buy a building, it costs $12 million, then you can't close escrow until you hit $12 million by definition, if that's the purpose of the raise. But if you are raising money where the legitimate strategy is to grow the business and to do the marketing, the software development, whatever it is that your business entails, then you can do a zero minimum raise. Obviously, there are risks in any offering, and you delineate those in the risk factors of the offering. But you can have a zero minimum in that case, and there is no maximum that the SEC applies except the number of investors that you can conveniently bring in, right? So minimum and maximum is straightforward. At least in many cases, it's straightforward. The investor count thing I talked about earlier, that's a Section 12G issue. an important factor in doing an online raise of any kind is to make sure that you set a minimum investment amount that is not going to put off investors. So if you think about this from the investor's standpoint, in a Reg D, they're doing something else on their mobile phone or tablet, in social media, and they see an ad and they like it enough to click on it. And then they arrive on the offering page and they're looking to see, is it attractive? Is it interesting? What are the terms? You know, what's the valuation? What is the minimum investment amount? And at this point, literally, it's a remarkably casual interest because they just arrived and they're as likely to leave after 2 or 3 seconds as they are to stay. It's up to us to make it compelling so they stay. But if you have a high investment minimum like 50K, then a very large portion of those people that we spent good money, you spent good money drawing in via the advertising are going to leave, because at this point in the cycle, 50K is way too much. They're only casually interested. Our job is to get them to stick around long enough that we can convince them they should be putting in 50, 100 or more. But you don't do that if you put them off with too large an investment amount up front. Normally, we see companies choosing about a $10,000 minimum because, frankly, in my opinion, most accredited investors don't want to waste their time investing less than $10,000. The hassle factor doesn't justify it. Okay, so I touched on that. Yeah. You don't want people put off by, and actually that's another issue I want to touch on here. You do want to attract institutions to invest in a Reg D. And this applies in a Reg D paired with a Reg A plus and in a standalone Reg D as well. So it may be wise to offer advantageous terms to people that invest more than $1 million, say, so institutions will participate. And having a high enough maximum can be an intelligent thing because, you know, a typical institutional investor, they may have a minimum investment amount of, say, $8 million, and another rule that says they cannot be more than 20% of the total raise, right? And if you would like them to be able to invest, then you need to have a maximum that's high enough to take that and not have them be more than 20% of the total raise. So bear those sorts of things in mind as you're establishing the terms of your offering. But what I'm getting at here is make it attractive to institutional investors as well. Okay, moving on to liquidity. As I already touched on this, typically, well, at 12 months after having received the security, the Reg D investor is allowed to sell to anyone if they can find someone to buy their security. At 6 months, they're easily allowed and able to sell to an accredited investor, or even sooner with an opinion letter from an attorney. But none of this is easy, and you're not listing the shares typically. With the advent of alternative trading systems, ATS for short, you are allowed to list your Reg D security on an ATS to sell only to other accredited investors when you have enough credibility in the company, enough scale, enough interest, and enough investors to make it worth doing. So an alternative trading system is a useful vehicle in some cases for listing your restricted stock. Fair enough? ATS. There are too many of them right now. This is a new category of exchange. There is no shorting and no naked shorting on ATSs, so that's a very big advantage in my opinion. And they're a straightforward place to provide liquidity when you deem appropriate to spend the money listing on an ATS. Obviously, if you're pairing a Reg D with a Reg A plus, then the Reg A plus provides great liquidity for all investors, all owners in a company actually, as long as they've exceeded their Rule 144 holding period. Okay, so now I've covered my intended material. Very similar actually. So I believe the SEC adopted testing the waters because I suggested a thing like that. I called it crowd audition in 2012 in the summer when they were 2012, when they were looking for input. I suggested that they allow entrepreneurs to test market their companies, and they started off with Reg A plus, and we trademarked that term in numerous interesting ways because we were paying attention. But they since then expanded it to encompass other offerings. So you can use test the waters in Reg D as well. And essentially, you are allowed to test market your offering as long as you do not, you absolutely do not accept any investments. You can take non-binding reservations in test the waters, and you're allowed to use marketing outreach, the same kind of outreach that they will allow in general. You can't overpromise, you can't hype, but the only valid way to do it is to do advertising that is a proper test. We did a test, one test where we did 3 different campaigns with 3 different landing pages for one identical company offering. And the worst example cost us $80 for each attractive lead. And the middle of the pack one cost us $40 approximately, probably $42 for each attractive lead. And the best one was $5 per lead. That was a really useful piece of testing, right? And you're allowed to do it. Well, it's a good thing to do as long as you don't spend months and months doing it and delay everything while you're waiting. It doesn't have to take a long time. You can do it via email or via advertising, but with email it's a little bit more cantankerous. You need to have an audience of people that are interested to be able to do it via email. Yeah, so advertising agencies will usually charge a monthly fee for creation of the content. They might charge an upfront fee for creation of the initial content, right? They will charge that, but once we're live and running, they'll charge a monthly fee, which will be usually in the $7,000 to $10,000 a month range. And some of them will also charge, usually they'll charge a percentage on the advertising media spend. So you only spend more money on advertising when you're happy with the results, but they'll charge a percentage fee on that typically as well. Reg D is available for Canadian investors with proper filing in Canada. It's not automatic. There's some filing work to do in Canada. The advertising needs to run as long as it takes to bring in the money. It's like how far will my car go if I stop pressing the accelerator? It's going to stop pretty quickly when you take your foot off the accelerator. Same is true with advertising. We get the efficiency of the advertising outreach up, then as long as the promotion is going on, we bring in new prospective investors and actual investors, but only as long as the promotion continues. It's not a once and done thing. It doesn't all happen up front. It isn't a walk in the park. It's a journey. It's a process that takes a lot of effort. We're looking for a CFO who can help. Giovanni, please send me an email, and I might be able to help. I don't have anyone in my back pocket. More likely to send you a shared CFO resource or service provider. Cost of Reg D. I'm going to send you, I've already touched on the costs. I'm going to send out, when I send out this recording, you can go to the website, the Manhattan Street Capital website that you see displayed behind me. You can use the search box there and type in what is the cost of a Reg D. We use a custom-built ChatGPT chatbot on our website, which uses all of our documents and all of our knowledge base to answer your questions. So you'll get useful answers there by using that feature. You don't want to ask all the investors to sign an NDA because you'll lose so many investors. You just will lose them hand over fist. You can, of course, do that. Cost of a Reg A plus, upfront, $160,000, reasonable total front-loaded expenses, and ongoing expenses similar to a Reg D, a lot of advertising, and more to it than that, of course. You've got a listing fee to be on our platform, advisory fees to us. Combining a Reg D and a Reg A plus doesn't change much because you're paying per, there are some fees we charge for that. I don't want to spend all of this time pitching my company, although I kind of would like to do that. But if you send me emails about this stuff, I'll send you detailed documents that explain our terms and so forth. But the cost of adding a Reg D to a Reg A plus is minimal because you've got most of the content is the same. It's not all the same, but most of the content is very, very similar to have 2 offering pages. I don't know the Blue Sky requirements by state off the top of my head. You can search in our website for that too. We delineate the different states. We recommend marketing all of the service providers, especially the marketing agency, based on their expertise, availability, and their costs, and how our experiences have been. Frankly, it's an ongoing journey where agencies come in. We bring them up to speed to the extent we need to, so they understand what and how to do what needs to be done. And they either get burned out and become useless, or they get too expensive and arrogant and charge too much. So over time, we have to bring in new agencies and bring them up.
I'm doing good. How are you doing?
If you're asking what would be the first step, it would be to email me at rodturner@manhattanstreetcapital.com. That would be the first step for me to assess how likely it is we can succeed for you and what it is you want to do, and to give you advice on the costs and process and so forth. And then once we're signed up, then we're bringing in, all the different service providers, obviously. Carl says Reg A audit requirement is 2 years. Yeah, that's true. For a newly formed, yes, that's just the life of the company. That's correct, Carl. Yeah, I attempted to say that just now. Maybe I didn't say it clearly, but that's correct. If your company's 2 months old, then you have a 2-month audit, which is very low cost and simple. Amir says, is there any cost associated with the initial success? No, we don't charge to help you figure out if you should do this. No, I'm assuming a normal approach. If you would have us jumping through all sorts of hoops, doing an audit of your business, then we would charge for it, but that doesn't normally need to be done. It's pretty straight. I have a lot of practice with this, which helps me understand which companies are appealing, which ones are not so appealing. There was a company a couple of years ago, probably 3 years ago, that wanted to do an IPO to the NASDAQ. They were doing about 40 million revenue. They were slightly profitable with a slow growth rate in a very boring business that was hard to explain. And I advised them not to do a Reg A plus. They kept coming back, and I kept on saying, no, we shouldn't do this. Same thing for Reg A plus. We don't charge for advising you if you should do this. Yeah, we've done life science startups. Biotech is one of the best segments for companies to raise money via Reg A plus, especially, and in Reg D, because people care to help other human beings and their family members and friends. There are some biotechs that are horribly complex and or revolting to consider, but there are a lot of them that are very appealing to investors. I thank you very much for attending. I hope you found this useful, and look forward to hearing from you via email if you have follow-up questions, and helping you if it's appropriate. And again, bear in mind the caveats. We're not securities attorneys, we're not auditors, we're not broker-dealers or underwriters, not valuation professionals. All these things we're not. Trying to help you anyway, right?